Hey guys, Mike here. So a lot to discuss today. You know, the Fed minutes come out, the market turns. I'm gonna talk about why they're totally BSing this, by the way. You know, then we're gonna go over how you can tell it's earnings season, boy, with the stuff that rolled out today from these financial institutions, let me tell you. But I'm gonna start you off with this because anytime I come across something that's just crazy, it doesn't matter to me if it has to do with the market or not. I'm just going to show it. And this is the craziest YouTube video I've ever seen. I will not put one of these in every video, I promise. But this one right here is absolutely amazing.
Oh, it's going to be right there. You cannot stick it in the ground. It's not going to work.
Who did that?
You got to put it in the shoe.
And my first thought when seeing that was, thank God somebody grabbed that baby out of that seat of his, because you just see what happened to it. So yeah, when things can't go wrong on 4th of July, good Lord, I'm just glad everybody's okay. I hope, at least, I don't know, but that came across my feed on Twitter and I was like, holy cow. So my 4th of July was a little bit more tame than that. I don't know about yours, but that's amazing. And I'll tell you, I'm going to show you a chart, and to me this right here just absolutely encompasses what you're seeing in the market right now. This is Upstart, and I want you to look at this thing. In May, when the stock market was going down, Upstart goes up a whopping 78% in 8 days after a terrible earnings, right? Comes back down, right, all the way down here, 33% up, then goes back up to 80% up, and then from there it's just sold off ever since. So it's up about 17% since May. And you can tell earnings are rolling around because we're starting to get the price slashes, the downgrades, the upgrades, and there is no upgrades. But you know, you see PayPal being slashed from 140 to 93 by Piper Sandler, Visa from 239 to 204, Bank of America slashes Microsoft from 365 to 345, Goldman Sachs rolled out their price downgrade of 157 to 130 for Apple. You can see Google gets slashed from 3,000 to 2,700. Coin gets a price target of $54. Ford gets gutted from $20.50 to $13 by UBS. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And that was the ones that popped up in my feed today. I could actually go on and on. There's many more. I think it was JP Morgan or Morgan Stanley, one of the ones put out a whole sheet about 3 days ago. And they slashed, it had to be 50 or 60 stocks. And most of them well known. So you can tell finally you're starting to see that happen over about the last week now, which, you know, you think with yourself, like, why didn't you guys do this like 4 or 5 weeks ago? Why are you waiting until now? Because now we got earnings rolling out and they got a little more sense of what's going on in the economy. So we're going to see, obviously, how this earnings is. But you know, the Fed rolled out their minutes today, and this is the ones from June 14th, June 15th, right? So it shouldn't be shocking, but it gives you insight to what they're thinking and, you know, what the market reacts to, which obviously they react positively to it. I don't really know why, but, you know, if you look right here, obviously after the high inflation data in May, they said, okay, 75 basis points is good for June and July's meeting coming up. And, you know, this shows off what they're rolling off on the balance sheet, which we talked about. Around $47.5 billion total in treasuries and mortgage-backed securities monthly for the next 3 months. And before we go on, I just want to say that's how shocking this is to me. That just think about this. The Fed just started quantitative tightening. They just started back in March of raising rates a little bit. But in June 15th, that's when they start rolling off the balance sheet. They just started that portion of this. It's supposed to go on for 3 months and then double after that. And already, just from that, people are already, you know, supposedly the market is pricing in for them to start cutting rates starting either at the end of this year or next year. But they're pricing in for them to stop raising rates by like October of this year and then to start cutting mid next year, I guess, obviously because we would be in a recession by that point in time. But we just started. Keep that in mind. And you're seeing the market sell off like crazy because it's trying to price stuff in. But we ain't even really, you don't even feel the effects of this kind of tightening for quite a while. So that's what's kind of amazing about it to me. And then going on, I don't know if they're on drugs up there or what it is, but they said GDP growth appeared to be rebounding after having declined in the first quarter. Really? Okay, we'll talk about that in just a minute. And then they go into PCE inflation, what they're expecting here. And, you know, what they're expecting is 5% in 2022, core inflation to be 4.1. PCE inflation expected to step down to 2.4% in 2023 and then core at 2% in 2024. And this is another one that just ain't working out for them. While the labor markets were anticipated to remain tight in the near term, participants expecting labor market demand and supply to come into better balance over time, helping to ease upward pressure on wages and prices. And that is just not happening, folks, because we got this out today. There's still 11.3 million jobs outstanding right now. And so we got the Atlanta Fed. They're saying, nope, already in a recession, have negative GDP coming out. They're saying they're meeting right there that, oh, I think GDP upticked, and so I don't know what they're looking at. The Atlanta Fed is not looking at. And again, I take into account that they really can't tell the truth because it would totally send the markets and everything else off the rails. I get that. But to tell me they're expecting basically positive GDP, Atlanta Fed's going, nah, it's going to be not only just a little negative, big time negative, okay? I mean, that's not good. And then you get the job numbers out today, and I mean, over 11 million outstanding jobs out there to be filled. And that's, I mean, obviously, what they're trying to do is bring that number down, right? And that's just not happening right now. And so, at least at the pace I'm sure they would want it at. And so that's going to keep the job market tight. It's going to keep people being able to obviously, or companies having to try to offer increased wages to get people in the doors and that kind of stuff. And so, the other thing I was going to look at here, the last two things, is the reason why I don't know if they'll stop raising rates September, October. Only they know that. And if inflation is still high, I don't know how they do that, but the big thing is there's things that are happening now that haven't happened in the past, okay? And it's that simple. And one of those is, and I think this shows this well, is how the Fed has broken from falling consumer sentiment, right? And they started that in 2008, but if you see, when they're normally raising rates, consumer sentiment still is increasing, or at least it's stable somewhat, right? And you see what's happening now? Consumer sentiment is in the toilet as these rates are going up. It was falling before the rates were going up. But you see, any of the time they've been raising rates, usually it's got to get pretty high up there for consumer sentiment to drop. But even there, it still bounces right back. It still goes up. Or it just goes sideways, up and down, which we expect every other time they've done this. But now it's totally different. And, obviously you can go into recession just with consumer sentiment because we make up 70% of the purchasing power out there. And if we're not happy, we're not going to be spending, right? And then the other one is, I always harp on this. This is just the truth. There ain't no way. I mean, if they get to 3.8, 3.4, whatever it is they want to try to get to right there, remember, that's like $1.2 trillion just on extra interest payments, which is more than we spend on national defense by almost like 33%. We spend about $850 billion a year on national defense. And so there's just no way with this debt they're going to be able to reach what they want to reach, which is why you see like the bond market and people are just calling their bluff already. Even though they just started, they're already calling their bluff. But they're going to pivot for totally different reasons than what they have in the past. They've never had to pivot because the debt is just so outstanding and so great, and they still have to service it, that they can't have these kind of interest rates. And so that's one thing. All the downgrades you're seeing, one thing is because the dollar just continues to get stronger. Even I talked about it yesterday, it's going to be higher today, and the euro continues to drop. Well, if that's the case, remember, they're reporting dollars here, right? So Apple's big there, Google, all that stuff. Well, they have to obviously convert that into dollars, and so with the dollar being so strong, it's not good, right? It's not good at all for them. And so that's a big thing. Plus, with what Europe's going through, if they avoid a recession, I'll be stunned. I don't know how they do, just because their energy prices, we think we got it bad here. Their energy prices are way worse over there. And with them, their inflation is high as can be, but guess what? They still have negative rates. Like they're not into this quantitative tightening at the point like we are. And so I don't know what they're waiting on that one, but as I don't know much about their economy or their politics, but yeah, that's a whole different ballgame. But when it comes to earnings, you're definitely gonna hear that on the earnings calls. And so, it's just a whole bunch of stuff obviously that's going on at once. But you can see again, different times, different things are gonna happen. People are making predictions off the past, which who knows, maybe it'll still fold. And we know the markets. For some reason, I just feel like the markets are just itching to go on this run, right? When I say markets, I mean institutions are just itching to take us on this run into earnings and to do what? the earnings come in extremely disappointing and then just plow us right back off. But I feel like, I swear, for some reason, I'm looking at these markets, I'm like, just feel like they're about to do some, manipulating again and try to run these stocks up. They shorted so much and then load up on the shorts when earnings comes, just in case. And so if earnings obviously does what a lot of people predict it's going to do and are disappointing like the first quarter, sell off, but they've already shorted, so they're good to go right on the backside. So I don't know why. I don't know. Let me know in the comments what you think. There's just something in the back of my head. This little voice keeps saying, yeah, I'm starting to see some weird things right now, and we've already seen a lot of weird things, obviously. But it's just like that Upstart chart I showed you. That to me just signifies like there was no reason for that run. The sell-off happened again. I mean, it's just like amazing the amount of manipulation. So anyway, I want to put that out there to you. Hit the like, subscribe button if you got anything out of this. Share the video. Really appreciate you guys. And I'll see you tomorrow for another wild day in the market.